Good morning, guys. This is Simon with Trade and Perform Coaching. And this morning, this is how you get hold of me. So, this is training video number one. So, this applies to ES or NQ, what I'm about to show you. But it's the most basic trade so that when you come into the room, um, it doesn't even, if you choose not to, you don't even need coaching. You can follow this very simple setup. I'm going to give you three variations on it, starting with the basic, the highest odds, and then the third highest odds um, on the trade. And we'll follow it on NQ, and then we'll look at it on ES. So here we go. And it's 7:35 in the morning. I'm going to try to get this done in 15 minutes. So when you start off, let me explain the basics of the trade. The first thing you're looking for, and I'm going to go until after 9 o'clock just because of the amount of noise that takes place prior to 9 o'clock. What I am looking for, I'm going to put a big square on it, is an orange circle to the downside. This is an NQ 15 tick Renko bar, and I enter when that bar closes. I know where it's going to close because there's an algo off to the right that tells me the exact price the bar is going to close. And the advantage to this is there's a specific stop. Your stop, I put it 2 ticks behind, but 15,462, and your entry is going to be at the bottom of this bar, and it'll tell you where it is. It's roughly 15,449.75, right? So if we go through the day and we look at and then its cousin or its sister trade is this bar right here, the blue dot up. And what we are looking for specifically, these are Keltner channels. You can use Bollinger Bands. It really doesn't matter what you use. What we want to do is get outside the standard deviation of rotation, and that's what that channel helps you do. There's nothing proprietary about that. So its cousin on the upside is this. Okay, again, its entry stops anywhere from 9 to 15 points. So just calculate when you're calculating your risk, a 15-point stop, right? So this is on the fourth channel, would be long. This is on the fourth channel, it'd be short. Now, what we're not trying to do here, what we're not trying to do is read the entire market. What we're trying to do is pull money out of the market. For example, this trade goes from approximately 15,449, and the best, if you traded it perfectly, was 15,408 and a quarter. That's $1,000, right? But let's be realistic. For me, I try to get my risk off relatively quickly, and I would have scaled probably either here or here. The other alternative is to scale and close it out on your first bar up. But most of the time, I'm scaling and then seeing if I can let my trailer run. Okay, and I am reading the market in the room, but this is if I'm not reading the market and I'm just looking at entries, right? So 7 to 10 point scale and push your trailer, right? So again, the stop always goes right at the bottom of the bar, and I'm going to explain what happens if that trade gets stopped, what step 2 is. But initially, you're looking here. So this is a valid entry right here. Okay, so I guess I'm actually going to be thrust, although I believe the 2 tick stop doesn't get hit here. Let's pretend this gets stopped. Okay, so once you have the orange bar down, you're going to lose 15 points. If it gets stopped, so if we blow that way up, okay, you can see that this bar just gets nicked, right? So instead of just continuously extending the risk on the trade, if the trade gets stopped, so this is step 2, if the trade gets stopped, which this does, you re-enter when the bar closes down. And again, you know exactly where that is because the algo tells you where that is. So your entry would be 15,423.50, right? And again, you lost 15 points, and you're going to stay right on process. I'm probably going to scale right about here, right, which is going to be 23 to 16, which again is not even 10 points. I'm just trying to get the risk off if it stops, and then it pushes towards the lower end of the channel. So that's 23 to 10. So all that's done in this case is recovered the trade. So I do look on the chart and figure out, well, which side do I want to be on? So The idea is to scalp through until you have X amount of winning trades and you've built P&L. And we're looking at location on the chart, but we're looking for a specific entry, right? And again, you'll see if you carry this over that I'm focusing on this, focused in on this. So I put a line across it. So this is trade 2. And if you looked, if you were going to trade this, the actual trade with the better extensions is this trap. Okay, so this is the original entry. This is the trap back in. And you can see that it gets a bigger extension. So for me, when I get what we refer to as an apex trap, I'm going to attempt to push that trade even further. Okay. And as you see, you get significant results. Whereas in this case, and this is all in real time, members in the room easily catch these trades. So this is roughly 15,247. And the best you could have done, 15,427 to 15,401. But you got to understand an NQ on one contract, that's a significant amount of money. So, yeah, 26 points, that's $400 or $500, right? And again, you would see this is a valid entry. So I got to tell you, if I get this entry and then I get this dot up, you should cover that trade for sure, right? So for me, this trade would have been flat. You can see it just touched the channel. And I would have been long this, but for a separate reason. When you get a blue and white dot, it's a super powerful algo on the same bar, and I would be long. And so again, here you see a trade where I'm just stepping you through. This is a Thursday morning. This is the, let me push this through. And these do not write and then unwrite. So this is the entry, this is the stop, and this is the trap back in. So minus 15, and you can see the trap back in gave you significant range, 15, 457, and it pretty much went in a straight line down to 15,417, which, just doing quick math, that's 30 points, $600 a contract. And I've wrapped up my day here at 10:30 for the most part, but it continues to work through the course of the day. And so that's trade 1, right? And it's actually trade 1 and trade 2. So let me just repeat that one more time so everyone's clear. It's the original entry. Okay, so in this case, it would be, this is 8:30, so let's see if we can find this a little bit better. So it's the original entry, like this, to the long side, and then push, and then the original entry to the short side, and then if they get stopped out, so an example of that would be here. So this is your entry. You get a 15-point stop. You retake the trade. Only 2 trades per time, so that you minimize the number of stops that you take. And then this would be, since this went profitable, this is an acceptable third entry right here to the short side. And then this actually technically isn't on process. Your next long trade here would have been at 10:30 right here. And again, that looks like it got nicked by a tick. But I generally put my stop 1 point below the bottom of the bar, but let's just say that got stopped. Here we'll see exactly what the stop would be on this bar. So that's 19 to 09, and I generally put a, so that's 10, and I usually put a 15-point stop per trade on this. So my original entry here would have survived this trade. So I allow for the little tiny wick behind it. Okay, you can do it to the tick, but my suggestion is just put a 15-point stop there. It's reasonable, and it gets you and it gets you to the roll to the downside over and over again. Okay, so now let's go to what the third entry is. The third entry has a higher stop rate, but a much higher win rate, and it's very, very specific. It is when you get a, let me show you, blue dot up. It's the exact same algo, just what this is showing is trap buyers and trap sellers at extremes. So this guy's trapping himself. So you get blue dot up, and then immediately following blue dot up, you get rejection of that bar. So the entry's on this bar with a 15-point stop, and you get the push down. So I'm going to give you 3 examples of that here, here, here. I prefer it obviously outside the channel. And actually, just let me start through the same chart again so you can see it. Oh, here's one here. And these print in real time. You usually see the orange dot and the blue dot appear before the bar is complete. And then upon its completion, once that bar prints, it doesn't unprint. Okay. This is the third trade, right? So here, there are stops. And that was it. So now let's go through and do Friday morning, right? And again, my emphasis is on Friday morning. The afternoons have been much more difficult. Plus, you're mentally strained at the end of the day. So let's just start off here, and we'll go through, and I'll label each of the trades as we go through. We'll just start at 8:30. There'll be more stops at 8:30 in the morning. Okay. So here we go. Single bar long. Not outside the channel. This is long. And again, I'm not looking, I don't want to trade in the middle of this channel. This is long and stopped. It's right at 9 o'clock. You want to trade it. There was econ or something at Friday morning. We don't trade right at 9 o'clock. You can just see all these bars got formed. We came out with econ at 9 o'clock. No one would have traded this, right? So I would even say we would have just skipped the entire first minute there. So let's just push out. So here, it's not that it didn't work. It's just this trade would have been impossible to catch. Here, okay, long, long. You took the orange dot down and the blue up, which is the third trade. That's a stop. And so I also want to point out, like, if you look at this, your you just didn't get short or long in here. Um, this would have been your short entry up here right at 901. You had to be willing to trade at 901 right after econ, and it was just fast, right? And you just didn't have anything show up off the top that would have gotten you in on the trade, um, not on the fourth channel. And as we go through the day, that would have been it. That would have been your day, right? Actually, quiet day when you look at it. And one of the things you're going to notice as you go through this, this would have been your short in the afternoon at 1 o'clock. I'm trying to see if anywhere else. If you get the arrow on the blue dot, just side note, the arrow on the green dot, very powerful, very high odds win trade. It doesn't show up as often, but it has to be all on the same bar like this. Very, very powerful trade. Same thing like this right here. It works at a very high win rate. So, and then there's your short in the afternoon. And the whole point of this So just stepping back, the whole point of this is not the whole point of this is not to be the whole point of this is not to be in every trade, right? So this is clearly a stop, right? You got your scale, but it stopped break even. It's way past the time that I would want to be trading. But the whole point behind it is way past the time that you should really be focused here in the morning and be done relatively early in the morning. And when you look at that, you go, well, Simon, there wasn't that many trades. But if you actually look at this through here, right? So this is starting at, well, I'll show you the first trade that Ronnie caught was right out of the gate. That one trade, that's roughly 50 points, that one trade, right? So this trade right here, 845, roughly 50 points, right? This trade right here, it's not even 9 o'clock and you sweat 50 all the way across. So just focus your attention, right? Notice I'm not referencing, and just so you know, it's not just now, right? Here, so let me show you something. I'm not just cherry picking 2 days and go, oh, look, here, I'll load randomly. Let's load 60 days and just go back and look 60 days ago and see what happens. Okay, we'll just start. This is August 10th. I don't have any idea what goes on. We'll just move forward from the open. Let's just take the losses. So here's the opening bell. And if you're willing to trade the opening bell, which I think is a little crazy, but it can be done. One. I'm only going to do the trades that I covered. So if you took the blue dot up in the inverse, that's a stop. Color it red. Okay, so stop. I want the exterior colored red. Okay. Profitable. This is a stop right here. Just put a right arrow on it. Stop. So notice you just don't have anything through here, right? And that's all right. It's not supposed to develop a trade at every single turn. So here's an example. This first one's a stop. That's your apex trap. Not in this case, the apex trap isn't huge, but it certainly recovers your stop and lets you push to the upside, get your scale off. So let's just call it stop. And since it was an apex trap, I probably would have tried to push out like this. And since that didn't happen, I probably had a break even trade there, right? So we come down, and then you'll also notice on this, you had two different trades here. You had the orange dot down. They got immediately reversed, wrong color. Orange down, they got reversed. And it's also an apex trap. Nothing over here. Again, I'm not trying to catch every twist and turn. I'm trying to catch my highest odds trade. This is an outright stop, which is totally acceptable, right? I'm not trying to do everything, right? I'm not trying to do everything. This is a short, profitable. So this one was loser. Obviously, I got a nice little rip to the downside there. Making sure I don't miss one. Nothing, 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 nothing. And at 10:30 at the latest, my day would be over. So um, short, profitable, right? Blue bar up, bar down. And then again, blue bar up, bar down. So this is a loser. Let's see if it hit the 15-point stop. 69, so that brings me down to 59. And then I subtract another 5 points, which would be 54. So this trade survives with a 15-point stop. So winner. And even if it had stopped the apex trap, and then over here, as I'm heading into 10:30, so see as you once you pass into this 10:30, you're going to see a lot of stops in here, which is why usually if I've hit my number by 10 o'clock, I stop trading. So what you're going to see here is, and you have to distinguish, right? If you look at these, you go, um, this is a stop, but it's only a stop one time because the 15-point stop never gets hit. It just never went. So it's a 15-point stop, right? This is a 15-point stop here. And then finally this goes right here. Now, I can add complexity and layers to this, right? But you don't have to. You're really focused on the AM session. Like, so if we came out of here, let's go into Friday morning and see what happens to us. So here's 8:30, and we're going to go through the same process again. All right, so the market opens right here. So again, if you're trading the open, you're highly aggressive, right? So this is stop and then trap. So stop and then the trap back in is the winner and pushes you up. Here's your next short. Clearly winner. You got scaled. This trade's going to be break even. It just didn't go far enough to do anything other than get your original scale, right? No entry. Here's your next trade. And your 15-point stop kept you in this trade. Here. Entry, stop. So that's 59 to 48. So clearly 15 points get you in. You push to the other side of the channel. This is a valid entry. It's on the 4th channel. Again, this paging you to the downside. This stopped you. So again, you'll see, you can tell Econ came out. See how the volume drops way down? You just want to trade it at 9 o'clock. So you give it 2 or 3 minutes to come out and then see what you have next. And what you would have seen here was stop, right? And that's really, it never trade. So let me make a distinction. You'll notice the best ones are when they actually get a bar close outside the channel, right? So this is a stop, and then you'll see your apex trap back into this. It was delayed, but it was on that arrow up. So your entry is actually into this arrow up right here and a 15-point stop. That's a more complex arrangement, but it's a valid trap and a lift. Again, this is a short that survives at least a scale, right? And then this is an apex trap, and you'll notice when you have the orange dot on the short side for both sides, guys, you get big extensions. So that's 932. You certainly should be profitable by that point in the day. This trade is break even at best. It's just too long to develop. So we'll just call it break even or loser. We'll just call it loser. It's no big deal, right? And then this is a winner. Again, you got to realize small little runs. This is effectively a scalping device, right? Small little runs, 10, 20, 20 points. 10 points is 200. 20 points is $400 per contract, right? This is a loser. And then gets a trap back in. Actually, I don't even know if that's a loser. Let's go see on 15 points. So let's erase my lines. Here. How many points is that? 70, 60, 15 points kept you in to at least get you scaled or out of the trade. That's a break-even trade for me because it trapped. I would have tried to push that further. This is break-even at best. Let's just call it a loser. Right, and then here's my winner, and my day's done. I just don't care what happens after that. But it's tradable in the afternoon, there's no question, but I run out of steam. You can see this is a New York lunch. I hate trading New York lunch. I just skip it, and then you can see this is the afternoon, and they pay all over the place. So again, if you have any questions or you'd like to visit the room, one of the reasons that people push back is because they needed coaching or they didn't have a specific instruction manual on how to trade it. That's exactly how you trade it. So, my name is Simon with TRADEnPERFORM Coaching. There are going to be two levels of the room. So, 150 per month will get you 150 per month will get you access to the room. 300 per month will get you 300 per month will get you the algos on the software and access to the room. So two-tier pricing system. 150 to just view my screens, and then 300 per month gets the algo on your desktop. So I hope that helps, and you have a wonderful day, guys. I'll talk to you later. Bye.